Let's move on then. Aditya Narayan is joining us, Head of Institutional Equities Research at Edelweiss. Aditya, good afternoon. Thanks for joining us. We're put behind a very strong earnings season. Do you think it could be extrapolated and there should be significant earnings upgrades? Is that something that the market is pricing in?
Hi Anuj, good evening to your listeners. Yeah, it's been a very strong kind of earnings season, and if you actually look at the Nifty numbers, they were up about 21%, but if you look at our broader coverage, it was actually 33%. So yes, it's been strong, it's beaten a lot of expectations, and it's been accompanied by upgrades. So, if you see our numbers, at the aggregate, we've seen an upgrade of about 4 to 5%. So I think in many senses, it's been, a very good season after a very long time. The issue is whether you will continue to see this kind of momentum. Our own sense is yes. So we are looking at a kind of 25% earnings growth over the next 2 years. And what has tended to happen is I think there have been a lot of reversals of trends that had happened for 4 or 5 years. You had a certain amount of deflation, you had a certain amount of disruption that had happened, and all of that is reversing. So whether it is the reversal of the telecom disruption, whether it is the asset quality reversal that you're tending to see from the banks, you're actually going to end up seeing a lot of reversals which will support strong headline earnings growth and reasonably decent underlying operating earnings growth. But I think what you need to keep in mind is the operating earnings growth is going to be not of the order of the headline earnings growth. But bottom line is, I think you've seen a good quarter, and I would suspect you're going to see this momentum sustain for a reasonably long period of time.
Okay, the momentum will sustain for a reasonably long period of time. I think that would be music to the ears of investors. Aditya, good afternoon. So how do you approach it now? Because there are some new themes which are evolving, right? The whole PSU theme has been fleshed out. Now you're seeing some of these beaten down names, fertilizer stocks, value stocks that are emerging. But from an investor standpoint, how do you approach it?
So the way I would see it is, I think from a theme perspective, you can look at nearer term themes, which is what you're seeing, some tailwinds from, or you could see more medium-term themes. And I would say the more medium-term themes would really tend to be the IT space. It would tend to be the banks where we believe we'll start seeing a certain amount of lending. And you should start seeing the industrials also do well, given that we think CapEx is going to start coming through. So I would tend to believe the safer three themes to play in a market that's reasonably, bid up and vibrant. I'd say these are underlying themes which will sustain for a longer period of time, and those are the ones that you need to look at. I think the shorter term themes in terms of PSUs, in terms of fertilizers, those are very timing sensitive. There is a rotation element to it. There is a good news element to it. But I'm not so sure if the business underlying is changing that dramatically. And so to that extent, I'd see those as trades, whereas I've seen the former more as investments from a medium-term perspective.
Okay, by the way, just look at a couple of these stocks. SRF, that was when we started the show at low point of the day, it's now moved to high point of the day. It's just that kind of a market. It just turns and how for some of these stocks. BHEL, by the way, is now up about 11%. I think that's temporarily frozen now on that stock. Indiabulls Housing is the other stock which is making a bit of a move. Aditya, what explains this underperformance of FMCG? Is it the simple fact that the market's focus now is completely risk on, or is there some kind of a disappointment that the market might be pricing in?
So, no, I think there are two elements to it, right? One is in terms of, yes, the market's gaze has shifted to high earnings growth. The market's gaze has shifted to lower valuations, right? So I think that's one element, which is the market element. I think the other thing that is tending to play through is in terms of inflation risks and commodity price risks, where some of their earnings could be a little suspect. And I think the bigger thing that is playing through to their underperformance is the fact that, in this whole disruption that has happened, I think it's the lower end of the economy that has tended to get hurt. And the demand risk there could actually tend to be a little greater than have played out at this point in time. So I think at a fundamental level, the risk to margins through commodity prices and the risk to demand from the restructuring of the economy that has happened, I think those are real things which are weighing on it. Plus, from a market perspective, when you have momentum, when you have earnings growth, and you have substantially lower valuations, there does tend to be a shift on that front.
Okay. This may be sort of an out of syllabus question for you, but I do want to ask you about some of these smaller themes. Packaging films, for example, is a theme that has done so well. We were speaking to the management of Cosmo Films a while back, and they said demand has just zoomed, especially for some of the consumption food packaging companies. And so many other themes are there. The whole home improvement theme is doing so well. Is this still a structural play, or do you think most of it is played out already?
See, I think again there are two parts to that. One is there is a structural element to them, right? And a lot of them were towards just upgrading your consumption patterns or the formalization of the economy. I think these are underlying themes that play through to them. I think what you're getting at this point in time is really the cyclical element, that there is strong demand, supply sides are slightly constrained, and there is a formalization. So which is providing you this extra push up. So I think that's where you're tending to get these mini themes. Here also, I think you need to differentiate a little bit between, say, some of the packaging companies, which, there are a couple of others that you haven't mentioned, which are very, very cheap at an absolute level. So that is tending to play through there. Whereas you have the other elements of this, which is the, the home improvements, which are not as cheap, those stocks. So I think you have there are different elements to it. There is a structural element which is being overlain by a strong cyclical element, but you've got to be a little careful in terms of the cyclical element in terms of how long that effectively stays.
Okay, the market's slipping a little bit now on the Bank Nifty. That's actually cooled off quite a bit. The Bank Nifty is now up 130 points. It was up over 600 points, remember, in the morning, but there's a bit of a cool off. Now, since I'm talking about banks, Aditya, what have you made of this whole, the statement from the finance minister about two banks which will be privatized, two PSU banks and insurance companies, and the kind of rally that we have seen in PSU banks? Would you go beyond SBI, what's your call on SBI itself and the other PSU banks?
Yeah, so from an SBI perspective, we like it because we, as I said, initially, from an asset quality perspective, the worst is behind. You're going to get earnings tailwind. If there is growth that comes through, which we think it will, they will be the leaders. So that's a stock that we like. We've got it as a reasonably large overweight in our portfolio. So I think that's something that we are actually really comfortable with. As far as the other banks are concerned, I think I would just be much more comfortable playing an underlying business rather than an expected capital markets or an ownership transaction. I think those things tend to play through. They can come through, but they're very hard to call logically, both in terms of what is the right price, who are going to be the buyers, what are going to be the modalities, what is going to be the time frame. So if you take all of that into account, as a pure investment theme, it's just easier following the business. And I think there SBI leads the pack by a distance. And that's where we would actually tend to be more invested.
Any space that you would strictly avoid now? I mean, any sector that you're underweight on?
So the two primary sectors where we are underweight on, the first is the consumer staple space, which we spoke about, for some of the underlying challenges. And the other is the auto space, because I think valuations have gone up. They've clearly seen very good demand. But I suspect at some level you're going to find the risk of demand being narrower. The demand momentum that you're seeing, I would tend to believe there is a certain narrowness to this, and that would mean that it could run out of momentum, sooner rather than later. So that's another space where X of a couple of stocks, we think, the rally has been very strong. You could see weakness in demand, and we'd be underweight in that sector.
Okay, the other space which has made a big comeback is power. Though we don't have too many big listed stocks here, they used to be. They are not as big as they were, say, 5 years back. Names like Tata Power, NTPC, Power Grid. Any stocks that you would buy at these levels?
So we actually like that space. Tata Power is one of our top mid-cap picks because we think there is a very significant restructuring story within it. So that's something that we like quite a bit. I think NTPC gives you a fair amount from a valuation perspective. So that's how we would be positioned in that sector.
Also notice that you are underweight, or you said expensive consumer stocks. There are cement names as well that you're underweight on. At what point would you look to buy cement? Because I mean, this was a theme that played out quite well, right? Ever since sort of the post-COVID phase started, cement sales started surging. At some point, does it become a buy for you?
It will. We like one or two stocks quite a bit. It's just that, and if you see the earnings, they've been very, very strong. If you've seen either the demand or the pricing momentum, it's been great, and that's why you've seen such significant EBITDA rises. I think it's just one of those sectors where it is a little bit like commodities. When you're seeing very, very strong earnings, right, then you need to be a little bit watchful in terms of what kind of a multiple you will effectively put through to them. So the stronger the earnings, typically the lower the multiple should be. And at this point in time, you're actually capturing a little bit of a mix between very strong earnings and reasonably high multiples. And I think that's not the time to chase. I think you'd want either stocks to come off a little bit or for the move to ease off a little bit before you go into this space. So we've actually recently cut the commodity space to a neutral. We'd been overweight on it for a very, very long period of time. And we still believe the underlying environment is very good. But just from a stock price perspective, today notwithstanding, we do believe that maybe you're reaching a little bit of a peak there in terms of stock prices.
Okay, Aditya, we'll leave it there today. Thanks a lot for joining us. Good talking to you as always. We need to take a break. Up next, from tomorrow, 6